This is the Mad Greek from Rittenhouse Square at the Black Sheep Pub. Very famous place in Philadelphia, Rittenhouse Square. We're here on MLK Day with a very dear friend of mine, Greg Wolf, who's the CEO of the Wolfline Quantitative Sports Analytics at thewolfline.com. Tremendous opportunity for you folks out there who are looking to make investments in sports trading. Greg is your guy. Pay close attention because the next hour is going to be real. If you guys want to go to the website, I encourage everybody to go to thewolfline.com, and that's wolf without an E. Welcome, Greg. Good to have you here today.
Thanks, Dean. Glad to be here.
So let's get right into it because you have a very disruptive technology that bridges the gap between what historically has been known as gambling and investing whenever you're making an investment. And I hearken to my horse trading days where I go out to Del Mar and I hear the classic Trevor Denman, you've got 10 minutes to get your investments right before the start of the race. So tell us a little bit about how you came to bridging the gap and the technology in and of itself.
Well, really briefly, and I spent my time at Del Mar as well, believe you me. When you talk about investment, you talk about gambling, you talk about speculating, you talk about hedging, you talk about trading, you talk about whatever terms you want to use. It's just basically semantics. And there's for a long time been stigma attached to any type of sports speculation because it really hadn't matured to the point to where it is right now. When you talk about gambling, to be perfectly honest with you, there are a lot more asset classes, and securities that sound more like gambling to me than a sports speculation. At this point, we're very fluid to the point to where, together with Nevada SB 443 being passed into law in 2015, we are ready to make that jump with sports being a security. It's labeled now as a security by the legislature of Nevada. So I think it's about time we start treating it like that. So our patent claims go back to our global patent claims go back to January of 2010. So we were around for quite a while and doing research and development and building everything to be as top-notch and user-friendly as possible for everyone around the world in a universal context for any sport or asset class, kind of waiting for this legislature. So it just comports with what we've been saying and doing.
So just to give the listeners an idea of what it looks like, you have a graphic user interface. They go to thewolfline.com. They subscribe. They become members. And what they will see is a simple chart, although what's behind it is not so simple because it aggregates supply and demand in really peer-to-peer or exchange-type investments. I know that you've got some background on the Philadelphia Stock Exchange. You traded options. I've traded options. We understand that side. But to simplify for the audience, they're going to see a visual graph based on whatever opportunity exists, whether it's cricket, baseball, football, basketball, soccer, you name it, tennis. You could even bring politics into it. But your graph gives a visual representation of supply-demand in its simplest form, and then some very other analytical tools that come with it as well. Is that correct?
Absolutely, Dean. What it comes down to when you distill what makes the closing price of a sports speculation, and that's all that matters is the closing price of a sports speculation, because that's obviously where the true price is, where you have reached what we call the measured marker or the threshold, which is a market agreed upon equilibrium of price, volatility, or probability. Now, when I say price, that could be relative strength. It's also point spread or handicap. When I talk about volatility, that's the over-under or the totals in layman's terms, previous terms. And when I talk about probability, that's more the options guy in me coming out because you're talking about a delta probability percentage, which is analogous to a money line or an alternate money line. So the two things, the two major constituents of what make up a sports speculation price, and these are relationship markets. Make no mistake about that. They're all relationship markets. Most similar to foreign exchange, obviously, because it's relative to the one asset relative to the other. So if you're looking at just the NFL, for example, Cleveland versus Pittsburgh, basically you're just doing the same thing as the yen versus the dollar. Pittsburgh versus New England, you're looking at the dollar versus the euro.
Yeah, but in Pittsburgh and Cleveland, you got to cross the Monongahela, and Japanese yen dollar, you got to cross the Pacific.
Yeah, all baked in, all baked in. So what we're doing here is that the two main constituents of the closing price of a sports speculation are one is the efficient market hypothesis. If most of the listeners, I would think, understand what the efficient market hypothesis is, a guy named Dr. Eugene Fama won the Nobel Prize for its construction in 2013. With all respect to Dr. Fama, it's part of what we do. It's part of the pricing that goes into what is relevant in this particular context, but it's incomplete because it ignores the behavioral economics aspect of it, which is the second major part. But real briefly, for anyone that doesn't know, the efficient market hypothesis just says that all fundamental information that has been disseminated and made public will be included in the price, and it's baked in. So
it's absolutely true, because if price action is continuous through the game, and right before the half, let's say, God forbid, Antonio Brown goes down with a knee injury, the price movement in terms of the second half of that game is going to be reflected because everybody watched it on TV.
It's digested. Everything is completely digested, just like, we go all the way back to, the seminal book by Edwards and McGee, 1948, I believe, that discussed the dawn of technical analysis as we were moving forward that is only concerned with price action. Obviously, this was 25 years before options came on the scene, so they didn't speak of volatility or probability. It was simply price. So that is a major part of that. Obviously, the second huge part of it is the behavioral economics, and that's really the cream on top of the cake, and that's where the edge is found. That's where you get the irrational supply and demand, and you get the imbalance that occurs there. If we're dealing with something, and this is just common sense to think about it, where would be the best place to display the importance of behavioral economics than a sports speculation market or a horse racing speculation market, where there is absolutely no tangible asset associated with the perceptions of price, volatility, or probability. It's only abstract perceptions being traded infinitely back and forth with, as I said, nothing tangible. So because of that, behavioral economics is most certainly the most paramount part, after you understand the fact that everything publicly known is digested by the market and therefore made irrelevant.
I just want to be clear about something. Like, I've looked at your technology. We've gone through it. I've been through the demos. Mm-hmm. And you're 100% agnostic. The subscriber has to read the tea leaves, so to speak. You chart it, you graph it, you put it all there in terms of the supply-demand metrics, but it's up to the user to come to a determination of what they think is going to be their best resultant investment. Like, I have to choose between Pittsburgh versus Cleveland or Miami versus New England, and I've got to read that information. And if I've only got one investment to make for that particular period, I've got to determine myself what's best. You're not going out there making any prognostication whatsoever. That's correct.
It's selling shovels in a gold rush.
Exactly.
That's basically what we're doing. When I look at certain, basically what you need in any pursuit, any scientific pursuit, and as we know, trading is the amalgam of science and art. Throw philosophy in there, obviously. A thermometer is a great example. A barometer is a great example. An altimeter is a great example. A glucose monitor, a blood pressure cuff, whatever you want to talk
traffic
about.
signal. I could choose to blow through a yellow light, maybe get tail-ended by a red light signal, and either get the ticket or I don't get the ticket. The risk is mine as I'm coming to that intersection if I see the signal.
Right.
But also to be clear for the listeners, this is as much a tool to give sovereignty to the investor as a graph on stockcharts.com or on E-Trade or Ameritrade that opened up a tremendous amount of volume to the markets that weren't there before because the tool is now there for the user.
Absolutely. It's a complete paradigm shift in the industry. It changes the entire landscape of how people are going to look at these markets and understand that it's 100% contingent on these clinical market forces that, just like any security, again, conducive with Nevada SB 443 law, determines these products to be a security, so we should treat them like one. That's funny because although that law is very important as far as agreeing with what our technology is and theory and application and the inevitable future of sports trading, quant sports trading, especially in our case, being the fastest growing securities or financial market of the next 10 to 20 years. It's just inevitable that it's going to go that way. And whether or not legislators are going to accept that now or in a year, I can't say. But we're dealing with legislators, and we're dealing with going through the correct channels of lobbyists and what we have to do to get the truth out there so that they can get this regulated from a federal standpoint, and then also the states can do what they want to. But the regulation will come from either the CFTC, the SEC, or FINRA. And the only thing I can say about SB 443, again, out in Nevada, is it's funny because it does have a tremendous amount of value from a conceptual standpoint and a theoretical standpoint, helping to get this moving forward to where it should be. But Nevada is just, once again, they're late to the party. They have these actively managed hedge funds now where they're using sports as the underlying instrument at exactly the wrong time, when everybody's fleeing from actively managed funds and they're going and trading for themselves. I believe that PIMCO Ultimate Return Fund in the last 3 years has gone from 300 billion under management to about 75 billion under management. So everybody else they're either going to passively manage funds, which there is no correlation to in the sports market, or they're quantitatively trading online for themselves. And that's been a trend since the mid to late 90s, and that's why the floors are all shut down. And what we do is we offer this completely new underlying and completely new market, and we're catering to those people. So you just are going to go to whatever your particular brokerage is, and just as easily as you're going to have analytics for commodities and currencies and stocks and ETFs, you're going to have analytics from the Wolf line for sports speculations, and that includes fantasy for the people that have a proclivity for that. So depending on your jurisdiction, we also have a complete suite of paper trading and virtual currency that we call Wolf Bucks, which can be used in many different ways. It can be used to hone your skills in a marketplace that you're not, or an asset class that you're not familiar with. Filipino women's basketball, for example, or German handball. I mean, anything you want, checkers, whatever it is that there's a market made on, we can use the quantitative tools at the Wolf line to give people, what they want, and that's the ability to establish long-term theoretical market edge, and that's just the trader talking. And the thing is that when I first got, from a personal standpoint, and I'll make it real quick, it was just like, okay, first sports bet at 7 years old. I was at the track by the time I was 14, the old Garden State Park. When I found out that that the racetrack was not your opponent, that they were just kind of taking a brokerage fee, a huge brokerage fee, to be honest with you, 20 to 30% now, which is why they're in so much trouble. And it turned out that it was just a peer-to-peer exercise Well, that was when I kind of got hooked on the whole behavioral economics deal, and oversupply, under demand, and overbought, oversold, and the whole shebang. And then after that, my friend who I grew up with and was going to the races with for years, I was out in California doing my thing. I think I called on with like a psychedelic rock band or something like that, and he called up and he said, "You got to come back. I'm trading on the Amex. I'm doing this. This is great for us," and all this other stuff. And by the time I got back, it was '99, and that huge
over.
shift, that huge shift was over. Everybody was fleeing. Nobody had edge anymore. So you actually had to then know how, you actually had to speculate. You actually had to know how markets worked. You couldn't just sit there and 10,000 up or whatever and just buy on the bid, sell on the offer, whatever the hell they were doing. So I actually made my bones on the desk for a firm out of New York, and started as a clerk and learned the whole thing, and I was one of the first registered market makers on the ISE, which was the first electronic options exchange. I'm sure you know. And that was during the dot-com bubble, and I was just like trying to learn all this theory, not only derivative theory and option theory, which is, as you know, is the top of the food chain, but also market mechanics, technical analysis. And that time, technical analysis was still kind of like seen as voodoo, and we still have people you and I know personally that call it voodoo. And it's just absolutely insane that they would do that, because all technical analysis is a quantified and graphically displayed story of behavioral economics.
Correct.
That's what it is. And if I got to quote Jesse Livermore, these levels are, human nature is reflected in these levels, and it was just price. Obviously, again, options weren't around until 35 years after he did what he did, unfortunately, at the Sherry Hotel there up on the Upper East Side, in the cloakroom. But he said that these patterns repeat themselves at certain levels, and of course we have support levels, resistance levels of price, volatility, etc., trend lines, channels, whatever. And that's behavioral economics, and that's how it works. And it goes, we call it serial correlation, and it's absolutely true. And the great thing about sports as the underlying is that it can never go bankrupt. A stock can go bankrupt. A currency can become insolvent. A house can burn to the ground with and have no value left, with no insurance. But a sports relationship, it's a continuing spiral of price action or volatility action or probability conditions that's just in these finite stanzas that we quantify and make it, like you said earlier, as simple to read as a coloring book, a traffic light, or a thermometer. And that's what we want to do is give people legitimate analytics that can help them and be extremely efficient and take all the work out of it for them.
Well, there you go. That's the Wolfline at thewolfline.com. Wolfline Analytics does consider price action up to the moment. So what Greg is saying is absolutely 100% true. You're going to get that information priced in to the visual graphical model that you're going to see at the Wolfline when you go to thewolfline.com and you subscribe for a user package. And just to drop back to a couple of things that you talked about in terms of the Wolfline having its own EMH, which constantly proves itself over 130,000 relationships. You talked about German handball. Mm-hmm. So you're going to get the relevance of that particular market, even if there are only 10 investors in that particular event. Germany versus England in handball, and there are only 10 investors. It's like being at a poker table with 10 hands, right? So you're going to have that visual back no matter what. If you had 100,000 people making investments on Pittsburgh versus Cleveland, the relevance in terms of the visual response of that behavioral side up to the moment is priced into that visual metrics.
Absolutely. It's people will, the component there that you're talking about is liquidity, like always. certain asset classes or certain issues have more liquidity. So this is where we get into kind of the physics
right.
of
Treasuries versus copper.
Right.
Whereas at one point copper was heavily traded in the 20s and 30s, industrial use, oil as well, and then treasuries became.
Let's just use Apple Computer versus Clovis Pharmaceuticals, something like that. I mean, Apple is going to obviously, it's much harder to move Apple with the same force than it is Clovis Pharmaceuticals. So in that analogy, Apple would be the NFL point spread market. It's a much tighter, less volatile market than the German handball that you were talking about. And it's interesting that I bring up Clovis Pharmaceuticals. Did I bring them up already about the Oh, I didn't because we were talking about what actually is gambling and what these semantics and this nonsense, and how the big part is moving from those ugly words that really kind of distort people, and it really has hurt. And to be honest with you, when you look at PASPA and UIGEA and RAWA, which are the three, it's two federal laws and one bill that try to make it to where one state in this country, and we're an international company, we're patented all over the world, so the United States is not the be all and end all to us, but I just find the legislation very interesting and very hypocritical and very wrong, to be honest with you, from a constitutional standpoint. But the PASPA, the Professional and Amateur Sports Protection Act of 1992 could just be eradicated by just one sentence in Article 4, Section 2 of the Constitution. It says that the citizens of each state shall be entitled to all the privileges and immunities as the citizens of the several states. That's it. That's all. How could they write a law in 1992 that allows Nevada to do something that every other state can't do? So it's absolutely absurd to do that, and we're going to fix that if they don't do it through the legal channels they have now. Obviously, we're going to fix that by making, together with that Nevada state law, again, we're going to make it impossible because of the theory we have, because of the practical application that we have, because of the tools that we have, because of the terminology that we use. It's going to be impossible to have carve-outs that make it to where you can use quantitative analytics and make trades for traditional financial instruments, and then somehow discriminate against sports as the underlying instrument for what your speculation is. So when you talk about Clovis Pharmaceuticals, there's this one name that pops up in my head. I mean, you own the stock at 110 on a Friday. The FDA arbitrarily comes out the next day and says, "Hey, Clovis, your number one drug is not going to make it through this part of clinical trials." You wake up on Monday and your stock is $10 a share. I mean, what's the gamble, really?
Right, but we don't wish this on any professional sports team, but you hardly ever heard, as matter of fact, have never heard a plane going down on Saturday before a Sunday game. It just hasn't happened.
Well, I mean, it's even worse than that. I mean, to make the analogy there, it would almost be like, actually, the analogy there would be the way that interest rates have been manipulated and how that's affected equity prices since 2007.
But there would be no action on that, whereas the difference is in Clovis, the market's going to open up and someone's going to be on the losing end of that trade.
Yeah, it's indicated, but if you remember in 2007. Before the market opened, the Dow futures were down 1,000 points 2 times before the market opened. 2007.
I think it was May 10th, 2008. That was the Greek contagion. There was a flash crash, and it was down 1,000.
It happened 2 times. It happened 2 times.
Oh, that was 2010. That was
no.
That was the flash crash.
2007 with Bush.
That was right, with Lehman Brothers.
With Bush, with 2007, before it hit. It was before, the absolute top. Because
you're talking about October 2007 when.
Well, yeah.
That was the beginning of the Lehman meltdown. But the point is taken in terms of,
remember when they did the full basis point cut. With Bush. That was before, because it rallied, is what I'm talking about. The futures were down 1,000 before the market opened, and it was actually starting to breach that 20% into bear territory for the Dow.
Mm-hmm.
So Bush came out with Bernanke, and they said, okay, well, we're going to cut a full point on the Fed funds, and 100 basis points, and then by the end of the day, the Dow was up 1,000. So what if you had it? You were right to be short the diamonds. You were absolutely right, but he comes in before the bell and does that, and he just blows up your short position.
Look at
that would be like Roger Goodell coming in in the third quarter and saying, you got the Patriots and saying, by the way, all the starters for the Patriots, you can't play anymore, and you're up 14, and you end up losing.
You're still going to get price action there. You're still going to, like, for instance, what happened with Donald Trump during the presidency. Futures were off remarkably. I mean, they were off at 850 points,
yep.
And then you had an update at the open.
Yep.
But if you could price that overnight, if you could continuously wager through that period, which I believe you can in a live market like that.
Right. That's really.
But you can't in terms of a stock market. You can't.
Right.
So you have
Currently,
to have a live
right now,
market.
We're not doing. That it's just based. Like I said, the algorithms are just based on closing prices and upticks and downticks based upon those closing prices, because you're looking at that's how we measure buying pressure and selling pressure. We have correction. We have a correction mode. We have a momentum mode. We have more liquid, less liquid. So you can customize everything, and then it gets disseminated out to standard deviations of the price action, the volatility action, just like everybody would expect when they're coming from the traditional quant trading. And the reason why we put it into a graduated color format of alert significance is because we offer a full customized alert program to where you can just enter in whatever pattern you want and back test it yourself, and then you get emails right to your email box for any sport or whatever it is. And there's a tremendous amount of choices there as far as the customization. It comes right to your email box, your SMS, whatever you want.
Let's talk about some examples like stuff against the spread. We don't talk enough about the tools. And again, this is radio, so it's hard to visualize it, but listeners should try to visualize. For example, you had some notes that you'd given me that from 2005 to 2014, all 119 college football 1A teams had an aggregate win percentage ATS within 1/2 of one standard deviation on a normal distribution plot.
That's right.
And so having hot alerts in analytics to be able to filter through that is extremely important, because you're not talking about something that could be measured by hearing a tout on the street tell you 49.9% blah blah. And
did you hear that guy yesterday?
Yeah, pretty funny guy.
Yeah.
He didn't.
He didn't say 49.9%. This is the new thing.
Yeah, but he didn't get the Grecian formula.
Yeah, exactly. He said the new thing that as we know, there's been carnival barkers and snake oil salesmen, forever. It just depends on what embodiment they choose to take on for the times. And now we have these nerds that come out. You know what I mean? They got these nerds that are allegedly analytics. They got these black boxes that they say, and they say algorithms. They don't understand markets to save their life, right? But I guess they look the part.
So they couldn't explain the behavioral measurement behind that algorithm.
No.
It comes out like a fundamental analysis at the end.
Right.
So all that black box ass wash that they do in front of the public, then they get on their soapbox and they sound like a fundamental analyst.
Yeah. Pay no attention to the man behind the curtain. The way that they speak, it honestly said, I grew up in Jersey, and I had a bookmaker when I was 7, and it sounds like a conversation I would have probably in 7th grade. These guys, literally, and they represent gigantic sports media corporations. This one guy, and I won't say his name because I don't like saying guys' names, but let's call him
Joey the Clown.
Let's call him Nick Gold.
No, I like
right?
Joey the Clown better.
Okay, that's all right. But not only does he
that's like apostrophe clown.
Yeah,
the clown.
Yeah, but not only does he absolutely make a fool out of himself with the whole Trump thing, because he goes into politicals, as well, because he sells himself as being.
You talk about Silver, that jackass at 538.
I don't like mentioning names.
I mentioned his name. I think the guy's a jackass.
Yeah.
So, a pontificating jackass at that, because there's really. nothing there. Like, he could go to a market measurement if he truly took a poll.
Yeah.
But like most other pollsters, he was just on one side of the fence.
Yeah, he doesn't. These people don't understand philosophical economics. First of all, they don't understand.
They're only measuring one side of the market. Hillary Clinton's going to win the election, and that's it.
Right. You know me. I'm a dialectic philosophy guy, and that's how we take dialectic philosophy and we allow that to grow into a mathematical. It transposes into a mathematical product, which then can be artistically, interpreted and applied by the trader. But the thing about that guy and a lot of other guys is that, he gets completely crushed. He was selling Trump at 2%, feverishly, right? So he gets assigned at 100%. This is in the primary. So he gets assigned at 100%. So that's a negative 4,900% P&L, right?
If you're looking at it from an investment, which
Right.
is what it is, an investment. So
49
when you go to thewolfline.com, you're analyzing investment opportunities, ladies and gentlemen.
Yeah,
You're not looking at snake oil salesmen and snake charmers and letting them pour honey in your ear.
But how about the audacity, though? He has the audacity to not only get. I mean, do you think he might have gotten a margin call at minus 4,900%?
I don't know, but he should be here at the Black Sheep Pub with us, getting a call at the bar for his bar tab, because we are here live with Greg Wolf from the Wolf Line, and we're at the Black Sheep Pub in South Philly. Where are you guys today? Hope you're lining up your investments on MLK Day here 2017.
Absolutely. But just to finish my little spiel on this guy, I don't want to waste too much breath on him. I'm going to need it at the end of the line, as my grandmother used to say. But he gets so he doesn't get a margin call. Then he has the audacity to go after that and still just feverishly sell Trump and get smashed again.
And if the Iron Sheik was behind him, he could step on his back, put in a camel clutch, break his fucking back and make him humble.
So
just destroy the guy, like his self-destructive mentalities that are out there.
But now that's still not enough. So now he's still giving out picks and on sports, right? And he's picked up by this huge, sports media company.
That's
amazing. And of course at the bottom, and then he has the this is the one that I love the most, is when they say, well, we have simulated this game 100,000 times or 100 million times. They try saying they have some type of neural net, and it is just like, it's unbelievable how much it's
yeah,
so
like Tyson Douglas.
They
simulated that.
It's absolutely absurd. None of that means anything. It's all, again, if you're falling for that, I have a feeling that the people we're talking to are a lot more educated than falling for something that ridiculous. The tout industry, I'll tell you who the enemies of what we're doing are, and who are the going to be the latest adopters. The early adopters are obviously the 60 million quant traders in the U.S. right now online, the 600 million globally online that are quant traders that get it, that understand, that are going to be
price action.
Absolutely.
Just, I don't mean to interrupt you, but I have to tell you a quick, just a side story. TrackFox and I were at the Mohegan over the New Year's holiday, and we just stepped into the race book, and we were looking at one of the races. I think it was at Gulfstream, and we looked up with 2 minutes to race, and we saw the price moving from the morning line in the book to the current odds. And we just took those two horses. He and I got together on it. We saw the price action on the board. Didn't even bother looking at the we call the fundamental side of it, which is you read the charts when you're reading the form.
The past performances,
right? Past performance. It didn't mean anything because price action was there on the board, and there's somebody out at the track. There are really smart money guys making investments at the track. They're seeing things that you can't see. The only thing you could see is price action.
If you know trading, that's all you care about.
Price action, the wolfline.com, the Wolfline, sports analytics, quantitative sports analytics. Okay, this is what it's all about. It boils down to this, getting a visual representation of price action at that point in time. Without it, you're just flying blind. You might as well go to 538.com and go suck Nate Silver's dick, because that's what you're going to be doing when you buy into that shit.
Well, the wolfline.com, and it's not an accident that I call it the Wolfline. I mean, my last name is Wolf, but it's with an E at the end because I'm not an animal. So this is the wolf line, like the
Somebody
spelled
said
like
that
an
once.
animal. THEWOLF.
Am I gonna get in trouble for that? Is the media gonna come after me for
no? It's
for
okay.
like a bad performance?
Yeah, so there is a reasoning behind the wolfline.com being the name of the product and the platform and the website and the business. Actually, Icarus Heigl Analytics is the parent company. But the Wolfline represents the wolf, which is, again, an allegory where you want to be a wolf and not a sheep in any type of marketplace where, it's about independent thought, and the crowd is, there's an old Nietzsche saying, insanity in individuals is rare, but in large groups, political parties, epochs, it's the rule. And
Lone wolf, very sovereign. By the way, I love the logo. Yeah. The eyes, different colored eyes. The signal eyes are there.
Yeah, the other thing I just wanted to make sure I squeezed in the Livermore quote, because it was something we were talking about before, was the only news that matters is not in the headlines. And I thought that was a very profound quote by Jesse Livermore again, who made $100 million in the crash of '29 and almost that much in the crash of 1907. So I would rather listen to the ghost of Jesse Livermore than some clown, saying that he's a wise guy or something like that.
Talk about the Wolf Bucks a little bit. So users out there, you subscribe to the wolfline.com, and you go and use the tools that are associated with the Wolfline Analytics, and you earn Wolf Bucks, right, by using it?
Depending on your performance, you could lose Wolf Bucks. It depends on if you're speculating correctly or not.
Okay, well, I don't want to confuse any listeners. This is completely agnostic, no prognostications, but you actually reward your users for being right, and that's how it works. Wolf Bucks?
Well, it's that's part of it. I mean,
the better you learn to use the tools and profit from it, the better you earn in terms of Wolf Bucks. But Wolf Bucks are really tradable as kind of cross hybrids. I could take them into Nordstrom Rack or
right, depending upon the agreements that we have with different businesses, whatever.
Correct.
You can use them to purchase or get 20% off your bill.
It's an electronic currency,
whatever.
Like much anything else. It's
another virtual currency,
a rewards card. Or
something. Sure. You get rewarded for your performance. And the other way that Wolf Bucks and the paper trading feature is very important is because you can go into non-traditional contexts for yourself, because we've distilled everything down to dynamically adjusting risk variables, which are quantified calculations, and then from there collate that into the color alert with the patterns and everything. And that's universal over cultures and languages and everything else. You might not be so comfortable if you're from the Philippines or from Singapore or Russia, and you're trying to enter into the NFL or whatever. So you might want to use that as kind of training wheels for you. So Wolf Bucks are like training wheels when you're going into another particular marketplace where you don't know whether it's more liquid, less liquid, how it behaves. So then from there, it's up to you to do your own back testing, to do your own pattern recognition, and then you customize it from there. And that's where another great advantage of having the Wolf Bucks. And virtual currency is very important. And again, we have every feature that people would be expecting if they're coming over from these traditional analytics sites where you might be paying anywhere from $300 to $4,000 a month for their service. I mean, again, I don't want to mention any names, but there's one particular service, some people might call it a terminal, that charges about $4,000 a month to have access to. And they give you for the major sports, they give you the prices. They give you they don't call them prices like we do, but people are sitting there looking at technical analysis and quantitative analysis all day. Then they give you the markets or the odds for the NBA or whatever you might want to see, and then they have the audacity to give you the gold sheet, for God's sakes. The gold sheet.
That's like going back to when they used to write the quotes on OTC bulletin board markets in the 60s with chalkboard.
Yeah, with a
chalk.
chalkboard. Yeah, exactly.
That's what that's like.
That's how insulting that is. So, I mean, I've even, whether or not that company will license the Wolfline technology is pretty much a no-brainer to me. We got to do business at that point. It's a business proposition. Who's going to get the license? Because we can't white label. Obviously, we have to custom label because we're the only game in town. And that's why we got the patents and that's why we're completely proprietary. And it's again a paradigm shift, and everybody knows it's us. We're not trying to hide who we are.
Well, we wish you all the best success in the world.
Don't
you
bet
and
like
your
a
partners.
sheep, man. Trade like a wolf.
Don't bet
Betting
like a
is
sheep.
over.
Trade like a wolf.
It's quant trading.
The revolution of the wolf line,
Quant
similar to
sports
going back
trading.
20 years, traditional financial markets, their theory technology products empower the individual trader to be their own expert. Greg Wolf from the Wolf Line.
Nice job, boys.